everyone, welcome to Tuesday, and like normal we are going to take a look at the NZSX50. I'm also going to show you another chart, and I think you're going to find this really interesting. It certainly caught me by surprise last week. So I'll go and share my screen, but before I do, just remember this is general advice. It's certainly not personalised in any form of any manner, and I do recommend that you go and seek personal financial advice if you're wanting to get recommendations for your own situation. So let's share my screen. So like normal, here is the NZSX50, just the gross index, and I've got it over a 2-year period. And just taking a look here, it did fall last week. You're talking less than 1% change in obviously the values. But if you look down the bottom here, there is very, very little value or volume that's been going through. And that's actually really common during this period with the holidays. So we may see some change in that this week, just because a lot of people are back at work, that sort of thing. So you may see that volume starting to increase a bit. But let's put our moving averages on, and we'll see how everything's tracking at this stage. So for those who followed me, excuse me, for those who follow me, I like to use the 30 exponential and also the 15 colour. So we've got a really good sign here happening here. The market is trading above both of those moving averages, which is a very good indicator. And what we're starting to see is that 15-week moving average crossed through the 30, okay, which generally tends to mean, and it's not always set in stone, of course, but it does tend to mean that we're starting to see some upward bias in the overall market. And this is what I want to keep an eye on, because once we see that that's crossed through, highly likely there is going to be a trend in place, and it is going to be an upward trend. Because even if you look back further, you can see here that the markets crossed at about January last year, and we did have a good upward trend. It then obviously came back again, went sideways for the bulk of last year, and then it crossed and went to the downside. So we're starting to see that get closer now, which could be a very, very good indicator. Okay, so that's something we'll just keep in mind. Now, I'm actually going to pull up another company that I want to show you. So it is an Australian company. Excuse me. So it's called A2B Australia Limited. Now, this is a share that I was holding in my own portfolio. And what I wanted to show you is this. Look what happened last week. Okay, so the market opened at about $2.13, and in 1 week it fell to $1.41.5. Now, I did have a stop loss in place on this. I have talked about that before. It's really important to protect your capital, but in this example it fell through my stop loss and carried on out, because when you put a stop loss in the market, if those who are unfamiliar, you put a stop price in as to where you want your trade to enter the market, and then you have to put in a limit as to what is the lowest possible price that you would accept on that share. And in this example, it fell right the way through it, so it fell really quickly, really dramatically. And the other thing that I noticed with it took that fall last week wiped out 29 weeks worth of trading. Okay, so if I hold my cursor here, you will see that it was that candle there back on the 18th of June last year that this fall has taken us all the way back to. So there is a little saying out there that the share markets climb the wall of worry, and they slide down the slope of hope. Okay, and that was a very, very good example of that. So I'm not giving you updates on the Australian market, because obviously there are other providers and people that can do that, but I really wanted to show you that. Let's pull it onto the 1-day candles. So quite interesting, as you can see here. This is, I'll just go back over 6 months actually. So really interesting. Obviously we had this big gap back on sort of the 22nd, 21st of December, which was really encouraging. But pretty much since the 29th of December, it's just started trading downwards. So it was really interesting that we had that big fall. As you can see here, there's a lot of volume, a lot of selling pressure on that particular share. So for me, when I do invest into a share, I always make sure that the amount of shares that I buy are limited. Where my stop is limited to only 0.5% of my total capital. Okay, so it means that if this share hit the stop loss, at its worst case scenario, then I would only be losing 0.5, so less than 0.5% of it is only, sorry, 0.5% of potentially of my capital. Now, what I do is as a share price moves up, I adjust my stops so it keeps moving up as well. And eventually it will end up being in the money. And so my stop will end up being above where I purchased it for, is when I say in the money. And of course, I want to keep riding that up as well. This method, you will never ever get out at the top, but it also protects you from what just happened last week. With this example, because it had cleared its entry price, I was then able to open new positions. So my rule is that I do not want to have any positions open if there's a maximum of 5% of my capital at risk. Okay, so I don't open new positions until some of my existing shares are actually trading in profit, and then I will go and open some more positions. So this share was initially trading in profit, so it was great. I was able to open some more new positions, and then of course that happened on last week. I only check my shares on a weekly basis. So I'm sort of a mid to longer term trader or holder, however you want to look at it. And so I had opened some other positions. Now, this is also why I only limit my total exposure to any number of shares. So potentially I could have 10 shares available or new purchases that I've done, giving me the total of 5% risk, because I don't, if the market suddenly hits another downturn like we saw in the COVID, and it can and it will happen, it means that I'm only limiting a maximum of 5%. And if something like that happens and it starts knocking me out of my shares, obviously there's something happening in the broader index and it can set off alarm bells. So this was something really interesting that I really wanted to share with you this week. I hope that's helped. Like I say, and it is an Australian share, but hey, it's very relevant and it can happen to any markets. So hey, keep your questions coming, and if there's a share you'd like me to review, we can bring it up and just run my methodology over it. I would love to do that. So otherwise, have a wonderful day, and come back Thursday and we'll do a share and review. Thanks a lot.